Hello, everyone. Happy Sunday and welcome to our weekly webinars. What a week we had and what a week we're going to have in front of us. I hope everyone is doing well and you're resting during the weekend and digesting the trading week we just finished and preparing for the new one. And special welcome to the new people. I hope you'll find this practical, and the whole idea of this webinar, as I always say, is plan your trade and trade your plan. We're trying to create structure, get more organized, less spontaneous, and hopefully bring better results this way. And not just in trading, in life in general, things we do, the tasks and the jobs we do, and anything else. It's good to do a little bit of a planning, to say the least. Okay, a few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade, and my overall experience in trading industry is reaching 23 years. In June will be 23 years since I started as a proprietary day trader back in New York City. I did it for about 11 years, and after that, I moved to mentor, educate other traders, and of course, I continue trading, market, and trading on my passions, and I really love and enjoy it. And of course, I enjoy working with customers and try to help them, share with them whatever I know and try to help them. So the agenda of the webinar, usually the same thing. We'll talk about indices, stocks, commodities, FX, and today is going to be the same. These are the channels that you have with us. You have Telegram, Twitter, YouTube channels. My favorite. It's being updated daily, so I highly suggest you subscribe to it. You click on that bell, you'll be notified when new things are being added. You can find a lot of things there, educational, tutorials, anything you're looking for. And of course, the webinars, including this webinar, are being recorded. If you ever miss a live webinar, most likely you will find it here. And it's very, very useful and practical. Another thing that's important is the risk warning. You can find the full document at avatrade.com. Everything we do here is purely educational. Okay, so before I explain what this chart means, I just want to give you a little bit of overview of what we'll be talking about. We'll talk a little bit about at the end of the week, what happened with the Feds and reports of the big whales like Amazon, Apple, and Google. They call them different today, Meta, Quote, Alphabet. Amazon still Amazon. So we'll talk about that. We'll talk about the NFP reports on Friday, how it really shook the market a little bit, but market remained strong. We'll talk about the strength of a dollar, weakness of gold and other commodities. Go through indices, that includes US indices, European and Asians. We'll talk a little bit about a few stocks and so on. So let's take a look at this chart in general. You know, the VIX, you can Google it if you're not familiar with this. It's a volatility index for S&P 500 and usually goes the opposite direction of the market. So as the market goes up, the VIX going down and vice versa. This is the weekly chart. So I just wanted to show you, this is since 2022. The beginning of the year, the market fell and the VIX went up and made highs around 34, 36. The super high volatility, then we came back again, then pretty much we did the zigzagging. And lately, there's a lot of excitement, some volatility to the market, but the index is not moving. It's been sitting here. We're sitting on the levels of the beginning of the year. We actually just hit it last week, almost the lows of the year of last year. And now we're sitting in the levels of maybe April and July, August of last year. So it's very critical. The same thing, if you remember, in one or two of the meetings we had, I mentioned that some analysts are looking to buy the market when we hit the 34. There's no brainer. I remember one analyst, don't remember his name, said there's no brainer. Whatever the market looks like, if we hit 34, I'm buying. And so I guess it should be the same way when we hit the lows, the selling kicks in like it did over here. So just an observation, we're really sitting in the low on the VIX. So this is what it is. Let's take a look really quick at the economic calendar. Again, for new people or people that are not familiar with economic calendar, it's important to know what's happening. Okay, you can never predict what's happening, as I always say. Even if they told you exactly the news and the numbers, you wouldn't know how the market reacts to it. Things are so complicated these days. But the fact that we know that certain things are happening at certain times and days just prevents unnecessary surprises. So some people prefer to wait till the announcement and then see what the market does. Some people prefer not to trade during the announcement. And actually, there's some traders that waiting for the announcement. They like that super volatility and they try to really capitalize on those strong moves during the announcements where it had spikes up and down, especially NFPs or interest rate decisions and so on. So what we have here, I just took the high impact events. You can filter them. You can find economic calendar on our web trader or the app or anywhere on the website or on, you just Google economic calendar. There are a lot of providers there, whatever fits your needs. So here I just took high impact events and let's just go through them really quick. Monday, retail sales from European Union. We have interest rate decisions from Australia. We'll talk about Australian dollar. It's been one of the weakest against the dollar on Friday on that dollar strength. Governor of Bank of Canada speaking on Tuesday. Chair Powell is speaking on Tuesday as well. Every speech of his, if you remember, December speech killed the market, as they even blame him that Powell killed the Santa Claus rally. So very sensitive to watch. Okay, we have CPI numbers from Germany on Thursday, and Friday we have monetary policy statement from Australia again, CPI numbers from China, GDP, gross domestic products from UK, and unemployment data from Canada. And this number is also important, the consumer sentiment, Michigan consumer sentiment from the US. And I guess this is the holiday, they included it in the high impact in Japan. So this is the economic calendar. Again, good to know what's happening, important to know what's happening. So what we'll do now, we'll go to the MT4 platform. And just a little overview, we'll be talking about, like I said in the beginning, about some indices, some stocks, strength of the dollar, weakness of gold and silver, some commodities, China index and Hong Kong falling and dragging copper and oil with it, and a few stocks that are reporting and so on. By the way, this week it's going to be another busy week. Last week we had 100 stocks out of S&P 500 reporting. This week it's about 90 stocks, close to 90 stocks that are reporting from the S&P list. So it's big thing. As far as I'm not going to go through all of them. You can just Google and see if you're trading certain stocks that are reporting. You probably know. We'll talk about two of them today, which are going to be Uber and Disney. I'm going to get to them after we go through the indices. So indices. Let's take a really quick look. We'll start with S&Ps. S&P is a general indication of what's happening in the global markets. Of course, the U.S. first of all. So. Thursday we had a nice move to the upside. It started with Wednesday, of course, with the interest rate decision, and decision was as planned, 0.25%. And the press conference was kind of a smooth operated press conference. Market took it very positively. We had a nice run, and we hit actually the levels of back in December of last year. On S&Ps, but then we closed lower and so on. So I just want to show you what happened during the NFPs. Friday NFPs actually dropped the market and we continued, we closed pretty much on the level of that drop. And the idea is, they really showed robust number of jobs added. It was crazy. The market was looking for 185,000 jobs added. It's almost triple. 517 jobs were added in January. That's crazy. Also, unemployment rate fell to 3.4. It's the lowest rate since 1969, according to the Economist. So they were expecting 3.6. So market didn't really like it because that was kind of when the opposite of what Powell was saying and so on. That the economy is showing the slowdown and so on. According to this is really robust. The market reacted. So the question, what's going to be next week? And let's try to see. Actually, this is the daily chart. So one of the things that traders are using, some of the traders using strategy Thursday, Friday. So if Thursday closed below, Friday closed below Thursday closed, then Monday could actually continue that direction. Let's see what happens. There's a lot of information and moods to digest during the weekend for investors and traders and funds and everything else. Let's see what happens. So far here, we're at the triple top. As you could see here, this was September of last year, high 4174.75. Another one, 4173.75, was $1 shy. Can you imagine that? Talking about the levels, some people really don't like the levels. I love them because they really make sense. And another thing, we stop right here on the triple top. Very interesting to see what's happening. Just to give you the numbers, the S&Ps on Friday fell about 1%, and it's still a gain on the week 1.6%. So the week is still green, and on the weekly chart we hit the 100 moving average. On the daily chart, we're way above all the leverages. Dow Jones fell 0.4%. If you remember, when the market was falling, Dow Jones was actually the strongest. These days, when the market ran, I guess Dow Jones, it kind of ran out of breath or out of gas, so it's not really running. So Dow Jones fell 0.4%, and it only gained 0.2% for the week. As you could see, almost a flat week for Dow Jones. And of course, Nasdaq was killed the most in the last year fall of the markets, and this year started to be the strongest. And we actually had a nice week. The Nasdaq on Friday, even though it went down 1.6%, but overall for the week, it was up 3.3% for the week. So let's see, we're not going to predict anything, but as you could see that we really hit the resistance on Nasdaq and S&Ps. Dow Jones is a different story, even though we also hit that resistance. So we're hitting resistance here. A lot of excitement. Market got really, really excited in the Powell's press conference. They took it a little bit of a dovish mood of the Feds. They're expecting maybe another hike of the rates, another 0.25 or maybe 2, and that was an optimistic mood for the market. We really ran, and Friday we reacted to that crazy jobs data, crazy positive jobs data. So that's as far as the U.S. indices. European indices were very strong. Take a look at UK 100. We are on the historical highs, and we actually closed at the highs. Very, very interesting. Take a look. There was no pullback on Friday at all. It went higher. DAX also very strong week. Not historical highs, but it holds up very, very nicely. French index also super strong. It's on the way to retest the all-time highs, I believe. And Indian index is sliding up. There's certain issues with that huge corporation there. It's a little controversial. Some investors pulled out and so on. The CEO, I'm sorry, I'm really bad with names. The CEO said that the company has solid results and so on. So I guess Friday it was a little bit of a correction to the upside. So that's as far as the indices. Now, individual stocks, we had big guys reporting. Okay, Facebook was the story of the week, or Meta. Take a look. They reported, and the stock gapped up on Thursday. They reported Wednesday after the market, so they were up 19, 20%. They gapped and continue higher. And Friday also, but we couldn't make the higher high. And it looks like we're hitting that 190 level as a resistance. The company didn't really report great earnings, but they announced that $40 billion will be spent on repurchasing the shares. I guess investors like that. So that's as far as Facebook. Then Google, Amazon, and Apple reported on Thursday. So Google and Amazon didn't do that great. Amazon stock was down 1.5% after the hours, after the announcement, and that was the results were kind of mixed results. Okay, and Alphabet or Google, the stock was down about 3%. Sorry, this is Google. Google was down 3%, and Amazon, sorry for the confusion, Amazon was down 1.4% after the market, and Friday sold out further. This is the daily chart. It gapped down, tried to recover, but closed lower than the opening. Okay, so those three out of four actually, Meta did great. The rest, Amazon and Google didn't do great, and Apple actually didn't do bad at all. And first reaction was with the gap down, and then was a strong move on Friday, and we hit the resistance similar to the indices. We hit the resistance that we had back in October 28. This is the daily chart, and the high was 157.39. But then we sold $3 to the downside. But we are back into above 150 area, which was a significant fight all the time, either as a resistance or support. So let's see how we're holding that 150 level coming into this week. Now, two stocks that I said that I'll speak with you about, the Disney and Uber. They're reporting on Wednesday, the upcoming Wednesday are reporting. So Disney had a nice recovery. If you remember, just to give you a little bit short of the review, with the former CEO came back, the stock went up, we hit 100, and then we sold out. And then since the selling off reached around 80, what was the heel, 85, we had a nice move to the upside. And just this week, we hit $113, and Friday, there was a gap and lower. So reporting on Wednesday, it looks like this level 113, it's a resistance as we had it over here. Let's see what the earning will come. If the market pulls in, we might come to 108 into the earnings. This was the previous level of resistance, and let's see what happens there. Uber has been also very, very strong, but we are hitting the levels of resistance around here, around $33. Very interesting. If the reports are great and the market supports it, we might actually finally shoot out of this range that we had for a while between $24 and $33, $9 range. This is the weekly chart, right? So let's see what the earnings show. As of now, we're really facing this resistance here that we hit again. And last time we were here on August 11th, and then September 15th of last year, and we're right back having a hard time breaking through this 33 and a quarter, let's say, level. So that's as far as Uber. And we'll wrap up with the indices. Just before we do, just want to show you China. China has been selling. By the way, there's some tension between US and China. There was a balloon spotted over the US territory. And China immediately said that U.S. should cool down. There's nothing. It's all. It's not really a spy balloon. It's a weather balloon. So I guess we'll hear some stories in the upcoming week. I don't know if it's related to it, but the Chinese index really sold out nicely here, and Hong Kong as well. And of course, if I speak China, you know me. I'll speak about copper and Oil, copper has been selling very nicely with the Chinese index and oil as well, and oil's approaching a support level around here. So we'll go into commodities in a moment. So, and the last index I want to bring up is Nikkei. The Japanese index got some strength on weakness of the yen. Friday, yen, or in the strong dollar, of course, yen got weaker, and Nikkei reacted to it as well. So overall, just to wrap up the indices, it was a strong week overall, especially for European indices. Asian indices sold out, China and Hong Kong, and US indices reacted positively to Powell's press conference, but then it was a small correction with the NFP numbers. So let's see, what takes control in the upcoming week. The fear of more aggressive Feds or continuation of a happy mood of a peaceful and relaxed Feds, which will be good for the market. So, and the stocks, Disney, Uber reports, and the big stocks mixed. Facebook, huge move to the upside. Apple, nice move to the upside. And Amazon and Google on the weak side. So let's move to a dollar index. So before that, actually, let's move to commodities really quick. Gold and silver had a huge drop on the strong dollar. Take a look, especially NFPs. As you know, NFPs, when they come out, it's a super strong effect on US dollar, gold, and equities. Equities didn't really react in that strong, but US dollar and gold reacted significantly. So gold sold out. We almost hit the 100 moving average on this fall. In the past 2 days, Thursday and Friday, gold lost significant amount of money here, right? And silver as well, huge move to the downside. As we said, crude oil moved down, and we are approaching first probably around this level here, 72, 73. We're about 50 cents, 40, 50 cents from that level. We might hit it, and if we break through it, we might continue lower. If you come to weekly chart, there's this tight range it was about $5 range. It's been really building up. We were sitting in the range since we entered this range back in November. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks, and now we're at the bottom of this channel, which doesn't look that great for oil. So let's see what happens. If we do break it, we can actually continue lower and look for next support. Natural gas, I've been talking about it for a long time. Take a look. This fall doesn't stop. And the past 3 sessions, we just had continuation to the downside. And it could be, again, could be wishful thinking for the buyers. It could be that around these levels, we might find some kind of support like we did here. There was a lot of fights around this level. First, this is the weekly chart. So take a look. It was a resistance back in 2019. Went lower, we went about a lot of fights around here, a lot of up and downs until we finally moved to the upside. And that up move finished somewhere in October of 2021. That we had a high low into 2022. And then, of course, with the war in Ukraine, it just shot up. We were a little bit shy of $10. And since then, we just went vertical to the downside. So there is a hope around here that we might find some kind of support. Plus it's the winter. It depends on the weather, of course. As I mentioned last week, the average weather in New York, it's 10 degrees higher. So that was bad for natural gas and reacted to it. So this is the hourly chart. As to take a look, Friday, we actually hit the low was $2.34. From there, we moved higher and we closed at 238, 239. Very crucial, this level. let's see if it really bounces. It's very attractive. I'm sure the buyers are coming in at certain levels and get disappointed, like they did here, like they did here, like they did here. That was a very strong one, around $3, $3.10, and we went lower. And then again, it gave hope to buyers here, and they just broke through, and we had the 3 consecutive days to the downside. Maybe we'll start showing some strength around here. That's it on commodities. Let's take a look really at what dollar did. And as I said, on NFPs, dollars just shoot up. Take a look. I want to show you the daily chart. If you remember, I mentioned 101.40 as a strong level. It's been holding for a very long time. Then on Powell's report or on the Fed's report and press conference, dollar just tanked. We hit low of 181. Then it continued Thursday. It gapped lower, but it closed back into this about the support 101.40. We closed Thursday at 101.55, and then when NFPs kicked in, just want to show you, this is the announcement, and we just went higher and we never looked back. So very strong move on the dollar. And if you take major currencies, it looks like Australian and New Zealand dollars suffered the most. Huge drop on them. I think they also kicked in the Chinese fall. As you know, the Australian and New Zealand dollar, they call them commodity currencies, as they sell a lot of goods to China. As you can see, Australian dollar, huge drop on Friday. New Zealand dollar, huge drop on Friday. The rest of the majors, they also, of course, drop, but not that great. Take a look. They're still holding certain levels of support. The same thing on pound. Pound also pretty much fell hard. And USD CAD moved into this territory above 133.80 support. And that's on the strength of a dollar and the weakness of oil as well. As you know, the Canadian dollar is sensitive to the oil prices. So that's what it is. Now, technically, also we spoke about dollar yen. Dollar yen actually moved out. We were holding this 128.40 level, and we had a nice move. Let's see what's next. Will we hit the 50 moving average and continue higher, or will we retrace? This week will show. And it caught my attention here. Euro GBP, it hit the same level here almost. The high here back in September 29, 0.8978. And on Friday, we hit 0.8978 to the penny. Speaking of levels again, as you could see, the fall started here. We just hit, funny enough, the same level. So the question is, will we go lower from here, or will we try to break? And this is very significant. So 189.80, 189.78, 2 pips doesn't make a difference. We'll see if the price action will show a big fight here and not breaking above it, we can actually sell off. And if we finally break above this level, we're actually in a brand new territory that we might see continuation to the upside, and that's a free space higher. So this level 189.78, the high of Fridays, we'll be watching. If it remains a resistance, we're going to sell. If it becomes support, if it trade higher, we might see continuation to the upside. So that's as far as Forex. And one thing that's very interestingly acting up is the Bitcoin. You see, we spoke about it many times. The Bitcoin is very sensitive to US dollar and the equities. It kind of went with the equities and against US dollar. So it didn't really react to a strength of a dollar. It didn't sell like gold, right? It's really, I mean, it sold a little bit. So that just shows relative strength, which is very important to spot. So again, I personally don't trade Bitcoin or any kind of cryptos. It's not my thing. I'm old school trader that trade, classic instruments. but there are a lot of people involved with it. Some people make a lot of money, some people lose. But logically speaking, when Bitcoin was supposed to fall on the strength of a dollar and it didn't, maybe somebody knows something. By the way, Kathy Woods, the owner of this famous fund, she's still aiming for 250K, and she's still holding her Bitcoin positions, and that's official. She just announced it. So let's see. Something like that means something. So again, if the dollar continues the strength, Bitcoin might finally kick in and sell off, and if it doesn't, that means the buyers might push it higher. And like we said a while ago, we need to break the resistance here on Bitcoin to really fly, and that resistance is around 25,500 on Bitcoin. That's it. Thank you very much, everyone, for attending. I want to wish everyone a great weekend, whatever is left of it, and enjoy it. Get some energy, get some sleep, get some rest, prepare for the week. It's going to be a great week. We'll find out. Of course, there's only two things, two camps, the Bears and the Bulls. Let's see who wins this week. The last of the week, or the end of the week, was mixed. First, we got excited with the Feds being soft, and then we got a little scared on Friday. Not too scared, just a little shaky with the NFP high numbers. And let's see what happens this week. Have a wonderful week. All the best, and we'll be back next Sunday. Take care.